Richard Perry in London. He's a market analyst at Hantec. Great to have you back with us, Richard. Now, we're getting word that the hurricane has now intensified to a Category 3 storm. As I mentioned, it is posing to be the biggest threat to oil output in 15 years. Can you tell us more about the impact of Laura on oil production and the industry as a whole?
Yes, hello, and it just seems as though that this is obviously a story that could be over in a few days, because obviously this hurricane moving through the region is going to be disruptive in the near term, but how long it lasts for is going to be the big question. Now, it's supposedly taking out around about 1.5 million barrels of oil per day out of US production. Now, that's somewhere around about 12-13% of total US production. So it is quite a big whack. And if it lasts for several days, then that is going to take a sizable chunk out of that production levels. And obviously then we'll be looking out for how it impacts on the inventory levels in the coming weeks. Oil prices have reacted positively in the last couple of days. It started to sort of peter out that rally that we saw on WTI today. Other factors are starting to come into play. Obviously, we had that really negative US confidence level, which did not sort of suggest that the US economy is rebounding so strongly, but playing into the fact that also we've got the US-China talks, which are seemingly going okay. So there are balancing factors on the oil market at the moment, but it seems as though it just depends on how long that this disruption is going to factor into the oil market will be an impact of whether we get further gains or not.
Okay, can we look at Wall Street now, because that eye-watering rally seems to be continuing. Both the S&P and NASDAQ have hit fresh new highs. Can you tell us what's driving investor sentiment there?
Well, what we've seen recently is NASDAQ really driving forward. These big tech giants of Google, Apple, Amazon, and the likes of Facebook are such big weighting fat players in the S&P 500 that they are helping to drive that market to all-time highs. Can it continue? Well, obviously at the moment these tech-weighted stocks are so strong that the momentum behind these moves are really going forward. So there is still potential for this to continue. But what I see is also this being a dollar negative story as well. The Federal Reserve obviously runs ultra-loose monetary policy, and that is helping to drive the dollar weaker over the past few months. And that is certainly a factor into this, because around about 40-45% of S&P 500 earnings is overseas. So that plays into the dollar negative angle on a strength in earnings story. So it is a real driving force behind the Wall Street rally. Now, we've got this speech by Jerome Powell tomorrow, and if he plays again a dovish line, then again we could see further gains on these Wall Street indices.
Yes, let's talk about that meeting, which is due on Thursday. And it would normally be happening in Jackson Hole, Wyoming, as we know, but it's going to be happening virtually this year. Can you tell us, what are investors hoping to hear?
Well, it's some of the weakness of the dollar has come through the fact that the supposed average inflation targeting measures are going to be coming into place. Now, that is a key term, whether that is actually going to be formally introduced, where the Federal Reserve, instead of targeting the 2% inflation level, allows a bit of wriggle room around that, because over the last 10 years we've seen that inflation has barely touched 2%. Only a couple of times has it come. The last one was in 2018 when the Federal Reserve was raising interest rates. So if the Federal Reserve allows inflation to move above 2% without tightening rates, then that is a really significant shift, because it suggests that the Federal Reserve is willing to remain at ultra-loose levels of monetary policy for the time to come. It could take several years to get inflation on a net basis above and holding above 2%. So it's going to be something that the markets are going to be factoring in. If also they start to talk about yield curve control again, that will be a factor. So all of these situations will play into how the markets respond tomorrow, and if Jerome Powell is going to be continuing on a dovish line.
Okay, let's see what happens. Richard Perry in London, thank you as always for your analysis.